the Federal Reserve Open Markets Committee, they voted unanimously, which was interesting, voted to raise the federal funds rate by 0.75 basis points up to like 2.25 at present. And if we think about this was kind of expected. I think a lot of the markets right now aren't really responding too much. If anything, they seem to be positive or holding steady. A lot of this information was kind of expected. If anything, maybe if they would have gone to a full basis point increase, that would have been led to a more drastic response. If I think about international markets in particular, the Federal Reserve Bank has actually been kind of ahead of other central bankers around the world in terms of raising interest rates here in the United States. And so maybe again we'll see patterns. I know like the European Central Bank had been meeting and looking to like raise rates recently, right? So you might see more of that going on around the world. But it's not necessarily great if we think about multinational companies here in the U.S. In terms of like if they're selling things abroad and then trying to translate that into dollars. So their profits have gone down a little bit for that reason, if most of their sales are abroad. It also too means that exporting is harder, right? Because foreign buyers of American domestic goods have to spend more to buy those products when their currencies are weaker relative to the dollar. So to the extent that some of the most recent things that I saw that had dropped by 0.75 points, like that might be help to kind of like weaken the dollar a bit, which has those pros and cons. Like the impact of inflation is not having as great of an impact per se on those who've taken advantage of moving to a new job and taking advantage of this increase in the wage level. And that's primarily folks that have been on the bottom. They're not everybody. Versus those who are maybe say like in more salaried positions or maybe like the middle class in particular, right? They haven't been able to take advantage in many cases, the fact that wages have been going up, right? They're kind of like, they're already in their position. It's not like they're like, maybe they can renegotiate, but that's not like a standard, right? And it's usually something you see more so when you change jobs. It's unclear when we see the report like that's coming out soon or in the future, will food prices be dropping? Right. And of course, like there are other areas that are concerning. I think like one of the biggest concerns I'd have is the increase in rental prices, right? Because a lot of goods, if I think about, say, food, gas, right? These are pretty volatile prices. These are things that can, quickly decrease and increase. But when we think about rents, right, like you're signing like a lease contract, right, for an entire year, it's really hard to actually adjust those prices. So the fact that, rents have been going up and continue to be going up based on the last few inflation reports, that's certainly concerning. If I think about, say, like middle income, lower income households, people that are paying and renting their home.